Hey, greetings, Dr. Jeffrey Scott here. I am sitting in my room in my hotel. Thought I'd kick out something relatively quickly for this weekend. Again, thanks for all the kind words and condolences shared. Life moves on, and this is more of a celebration of a life that was had and not one that was lost. Um, this is my market update for the weekend ending 1/18/2025. Lots of stuff going on. Markets end the week at or near highs, at least most markets, not the Qs. Brisk market rotation favors a small cap. As I told my wife, this is my favorite kind of market because if you're a top down trader, you're constantly shifting your focus to those things that are rotating into favor. But now, late breaking news, will the EU tariff threats by Trump and the trade deal suspension just announced by the EU kill the markets? Again, it's January 18th, 2026. My name is Dr. Jeffrey Scott. This is my email address is marketmripro@gmail.com. Google group is Top Down Trader, and my website's marketmripro.com. As always, this is not investment advice, but to be considered education. And why is my mouse not working? Oh, we'll get that working. Different computer. Let's see. Now it all works at one time. All right. As always, should be taken for educational purposes only. Anything I talk about is the spirit of education, not investment advice. I do these videos to demonstrate my tools for top-down analysis. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always be consulting with your financial advisors. And I have tools in multiple platforms. I typically do my weekend using the Market MRI Pro app because it's my one tool that combines the most different pieces of the things that I do. Um, but that's not to say that I don't constantly use my tools on other platforms. If you're looking for the wealth charts video, Monday I should have, or Tuesday morning, since Monday's a holiday, I guess that's up to point out. I should have something up on stocksanddocs.com. I just last weekend got away from me. Sorry about that. My Google group is called Top Down Trader. It's how I communicate with members. It's a no spam zone. New entrants get unmoderated, meaning I look at their messaging before I post it. And once you've done a couple, I stop moderating. Every week I get a spam, looks like a normal person, and first email's about duck cleaning. So we know that that's not real. So sign into Google Groups, go to all groups, find Top Down Trader, let us know how you want to contact us. Why? Because from time to time I'll offer discounts. I'll offer education that I don't offer to everybody at no cost. And sometimes I'll put in maybe a pearl about a stock like I did on Friday, what I think is an undervalued biotech that's got a positive trial and should have a ramp to approval. And I think it's way undervalued. No, it's not AGEN, which shares some of those merits. I always like to look at certain things from the Fed. I like to look at the odds of a rate cut, which keep getting lower and lower. Don't expect one this month. Maybe not until we get a new Fed head, middle of the year. And you could see that on both the 10 minus the 3 month and 10 minus the 2 years, and steepening of the 10 minus 3 months for whatever that means. Well, that usually favors small caps. We went from inversion to positive, and whenever that happens, you get the gray bars, which is a recession. So it would be different this time for us to not get a recession. And I'm the kind of guy that always says it's never different this time. We're not seeing any evidence of credit tightening, so it's not happening right now. And the other thing is the Philadelphia Fed Diffusion Index actually came in very positive, beat the number. So the economy is humming. So if anything, rather than having stagflation, we don't have a stagnant economy. So we have a good economy. And I think inflation still is behaving. So hopefully, middle of the year, we'll get some more rate cuts. Know your news and earnings dates. MLK, things are closed on Monday. Tuesday, there's nothing. except some major earnings dates. Wednesday, you got home sales, and then Thursday, you get jobless claims, a revised GDP for Q3, and then the delayed PCE report. If it wasn't delayed, it would be really important. It probably matters as well. Over on the right, it's what I refer to the beginning of earnings Lollapalooza. And I used to be so excited because this was Netflix season. Just great seasonality this time of year. But now that it's an arbitrage play with Paramount and Warner Brothers, I'm not touching it. But you could see we got banks, we got some industrials, regional banks, Netflix, and more this week. Intel. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts. And then we will be having a live meeting late 26 down here in South Florida. And if the folks in Orange County want to do one anytime between February and June, we'll have one there as well. At this point, there's not been any, I've not gotten any notification back from them. Now, I'm going to start this one a little differently, and I wanted to look at HWM. Now, a couple weeks back, I gave out HWM on the weekend. I believe it was the weekend with this candle here. This date here is 12/19. So that would have been 12/20, 12/21. And if you remember, the market was kind of wasn't behaving much at that time. It was very choppy. Now, one of the things that I like about the tool that Praveen has built is that I don't have to wait to the end of the day for my signals. My signals don't repaint technically, but they don't finalize until 4 o'clock. But I will go and look at the market in the afternoon, and sometimes I see something and I buy it. Now, I'm talking about this because I'm going to work you through the trade that I took, what I considered, and show you the performance. Because somebody emailed me and said, why don't you show me your trades? And it's like, I don't charge for this. I share too much already with my performance. And my answer was, judge me based upon my market direction calls and the things that I call out every weekend. But then I thought, what the heck? So let's talk about HWM. You'll remember a couple weeks ago, I started talking about ITA. It was probably about the same time. Both data centers and ITA looked like they were going to be interesting. So, what I got alerted to was that on this date, intraday and end of day, HWM, which is in the defense group, the aerospace and transport industries, that it had a double momentum signal, although the second dot wasn't closed yet. It was coming out of a squeeze. The relative strength in OBV looked great, and the high jump was reasonable. And rather than do what I typically do, which is not take trades during the workday, it was Friday. And Friday before Christmas, I'm working at home. So I took advantage of that. And what I did was I decided to enter a position. I gave it to you on Sunday, and one of my favorite followers actually commented maybe a week later that it actually went up nicely. And you could see it had a nice performance. Now, I want to show you the power of options. So, when I'm getting into it, it's right around the high of the day with the stock at about 200, 203. And it's 224 now, less than a month later, getting close to a month. Let's call it a month. This was December 19th. So in a month, it's had a 10% gain. That's pretty phenomenal. I wish all my stocks would have a 10% gain every month. But now I want to show you the power of the options. One of the things that I'm going to talk about at my mentoring session is going to be how I pick which option for a trade. And those that follow me know that I'm boring as hell. I do calls. I do vertical bull call spreads. I do broken wing butterflies. I do racial back spreads. I do synthetic stock, and I do a synthetic call, aka chicken shit synthetic. My goal is to have a low cost trade. My goal is to have defined losses, know how much I can lose, and when possible, have a big gain opportunity. So I'm going to show you the trade I took on this and why. So we're going to go into Thinkorswim, and I was going to go detail, but let's just take a look at it here. So first thing is this here is the account that ends in 3 that I have shared with you over the last year and a half. Historically, I've never shared any of my performance with you. Just to remind folks about that last year's performance, because not everybody's new. If you look at, that's this year's, let's go to last year's. If we look at from January 1st of 2025 to 12/31 of 25, designated beneficiary ending in 3, this was my yield curve, and I was up 180% on my portfolio. I started with 150 back in January. My goal was to see how long it would take to double it. And once I doubled it, I'd add 500,000 more in. So the way that Schwab calculates your account, they take into account any money that you add. Okay. How is it calculated? Let me see if I get that to light up. Daily time weighted return method, and takes into contributions and withdrawals. Here's my performance at 180.57. Actual dollars, 517. I was significantly off my high compared to 12% for the Russell, which was the lead. And excuse me, 21% for the NASDAQ, 17 on the S&P, and 14 on the Dow. I was pretty happy with that. Has it continued? Yeah, of course it's continued. I shouldn't say of course. Here's my equity curve in blue for the first 2 weeks of the year. I'm up 13.41% or 157,000. Now, I typically have good Januaries because of Netflix seasonality, but I'm not trading Netflix here. Now, let's take this account with an ending value of 1327. Let's look here. What's my ending value? 1327. There's how much cash I have. And I often talk about raising and cutting my cash position based upon what I think the market is doing. Here is the trade, HWM. Let's look at the long piece here. And the long piece is 2 different trades. One was a 200, 190 bull put. That means I sold the 200 put and I bought the 190 put. So if you look at that order, let's look at the trade. The 190 put, which was a protective put, I paid $6.45 on 12/19 at 1 o'clock, and I'm now in the West Coast, so this would be right before the market closed. That would have been 3:56 Eastern time. So I've got 645 paid. The 200 put that I sold gave me $10.20. So 645, 1020, that means 375 was what I got to use towards the long call. So I got paid 375 to risk basically 6 1/4. Now, if I have maximum loss, it'll be a negative 6.25. So that 375 was then used towards buying this 200 call. Take a look at that, which I paid a lot for, 1441. So you subtract 375, I ended up paying 1070, 1060, 66, 1066 for that trade. If we look at that trade, 1066, we'll use that number. What is that trade worth today? The $200 short put is now $2.75. I've made $16,000 on that short put. The long put, of course it's going to go down, has gone from 6,457 to $1.50. So I've lost 83% of that, but I've lost on that position $10,000. But you knew that would happen because if I was correct and the stock went higher, I'm going to have profit on the long call. So now my profit open on the long call is 26 plus 16 minus 10, 32,000. Divide that by 20. Okay, so that's on each, well, 32,000 on each share. If I got 20 puts, that's 2,000 shares. That's $16 a share in profit. So I put out $10. I have made $16. I still have $1 at risk. Well, not $1 at risk, another dollar opportunity to make between the $2 and the $1. My net liquidity is 53,000 plus 150%. That's my kind of a trade. Defined risk. I knew exactly going in, I could lose the cost of the trade plus the $10 between the put, long put, and the short put. I knew that if I bought a stock that was $200 and I risked 8%, I'd be risking $16. So paying $10 a share, I can live with that. $10, $12 wasn't going to bother me. So I met my criteria. Buy something relatively low cost. Well, $10 beats 200. Defined risk, and in this case, unlimited upside. So I do have a remaining trade, and that trade that remains, whoops, those are what I did. The trade that remains is view orders, as I've got it sitting out there for $1. And I'm very happy to close that and pay $1. Why? Because it comes off my margin account. And if the market blows up, I don't have to worry about the downside $10. So I'm pretty happy with that trade. As you can see, I've started the year off okay, but I know February is always bad for me. So I'll look to take off some more positions. Now, you see a lot of positions there, but let me tell you a little secret. A lot of them are protected. For example, AT&T. When I bought AT&T, it was a little bit, well, it was lower, but it got up to $26. I put some puts on it at $26. I paid $2 to guarantee that I could trade him for $26. Now, those puts are about the same as I bought them for, but the stock is down 3.5 bucks. So I know this is protected that I could sell it at 26, but that's not all. I could go through my list and we can find several of those annually. This group has just gone crazy. and it's just traded up to 24. But I sit on a $24 put, which means no matter what happens to the stock, I can sell it for $24. And there's more of these. Bank of America got some heat this week, except, let's see when I put it on, just before earnings. On January 7th, I put on a $57.50 put for 250 on Bank of America. That was not to make money. That was to protect my position. Well, Bank of America's down. My put's gone up. I've protected my position. So yeah, I have a lot of positions, but a lot of them are protected. Now, this is the one that killed me this week. I was in the money, profitable, and Salesforce is was a butterfly, a 260, 300, 310 broken wing butterfly. Exact type of trade that I tell you I take. And if I look at it, I paid 16 minus, this is twice, 720, I paid 9, I paid $11, and this thing blew up on me because the software sector fell off hard before I could get out of it. So I've got winners and losers. I just want to have more winners, and really the only thing that matters to me is this line right here, overall P&L year to date. Now, most of you don't want to see that. I apologize for doing that, but I got called out, and I don't think it's my responsibility on a free YouTube video to show you every trade that I take. I think what I do gives you a lot of value for the cost, free. But you know what? It doesn't hurt to respond sometimes, especially if I can make it a teaching moment. Back to the regularly scheduled story. Let's go into the daily briefing, and we could see on Friday, it was not a great day. Bitcoin was up 0.44. For the week, it was up 6%. So a nice week for Bitcoin. Volatility was up. Russell was the only major index to be up 0.09. Dollar was flat. Spider and Qs were down just a bit, and diamonds were down 0.22. So relatively flat session. If you look over here where they're closed, the indexes, except even with the Russell on the back on the bottom part of their daily range, I think it was at the top of the daily range was Bitcoin. From a perspective of new high, new lows, we worsened compared to the prior day. 115 new on the NYSE, 66 on the Nasdaq at 52 weeks of new highs minus new lows. Healthy, yes, but it's weakened prior day. I knew it was a worse day than my portfolio looked because only 40% of the S&P 1500 were up, 39% of the Nasdaq were up, and 42% of the NYSE was up. So it's a bad breath day when you have more stocks that are down than stocks that are up. And you could see up here for each of these indexes, the sector performance, how many were up versus the prior day, blue and green being today or Friday, the gray being the prior day. And you could see the markets were much better on Thursday than Friday. Weird thing for me is I did better on Friday than I did on Thursday, but that happens sometimes. If we look at S&P 500 sectors led by real estate, industrials, energy, and finance, and the laggards were here. We just got to look at one-day change. Communications, healthcare, materials, utilities. Interestingly, healthcare was down a lot. Well, it was down, but biotech held up okay. If we look at themes, it's uranium, blockchain, silver, Norway, MLPs, data centers, aerospace and defense, clean tech, semiconductors all did well. What lagged? Cannabis, China discretionary, China internet, lithium batteries, e-commerce, copper, software again, home construction, cloud computing, cyber. I think part of the problem with home construction was, as we'll show you, the rates. Some of the rates popped up. I think we'll show you that. We'll see. So I start with this picture every day. You know, Where did I come up with data centers and ITA as things to focus on? Because of where they fell in the themes. If I look at the timing brief, and I'm going to pick it up a little bit, the weekly, we're just looking at the red and green below. Spiders, Qs, diamonds, Russell are all in a buy on the weekly. If I flip to the daily, we lost the Qs last week. And I think we're going to see on the daily when it flips. Come on. All right, it's a little bug. I'll have to get Praveen to fix. This is the daily, and you can see on the daily, you can see the D underneath. On the daily, it is went to a sell, while on the others, the remain in a buy. So when the daily, trust me, this is the daily, and then the weekly predominantly are green, then the market is considered to be in an uptrend. The Qs have stalled. That's the one of the concerns before the EU news. But I left Friday position long, and if we get a big sell-off on Monday, I don't think it'll be a big sell-off that stays, but if we get one at the open, I'll take some heat for sure. If we look at the US index ETFs, and these are all right. So what's happening here, and I will call Praveen. The good news is I get everything first and have a chance to break it. The bad news is I use it for doing the videos. These are daily charts, even though they got both the daily and the weekly on it. That should be a quick fix. You can see here it's got the daily and the weekly, but we are looking at daily charts. So the S&P 500 is in a massive uptrend off the April bottom, and I put out a video April 7th. Hey, I did it. It's out there. I'm going to talk about it until the next big drop in the market. And that's, to me, the most money is made by calling bottoms and knowing when to get in. You could see the big move. We've definitely started to slow down our ascent, which is probably okay. And you could see up here, here was the all-time trading high, just going back to the 12th. We've kind of been consolidating here for 5, 7 days. This was interesting. All-time seasonality said we should be weak for a while, then run up into the middle of February. But over the last 5 and 10 years, the predictive seasonality model says we don't need to pull back. The green is a 17-day simple. This is the 21-day EMA. Here's a 50 simple. Here's a 100 simple. And there's a 200 simple. With that spread of the moving averages, I say, and just being off all-time highs, we got lots of support underneath. I don't see anything that would make me bearish. Qs look different, but they don't look that bad. I mean, the challenge with the Qs to me is I think they're living in this. And I thought we were going to break out on Friday. We came back in. We are in a wedge. We're going to break one way or the other. Seasonality, at least over the last 5 and 10 years, says we're going higher. I don't know. I don't think this looks bad. I think it's obviously weaker than the spiders, but time will tell. And by the way, it closed right at the 17. Here's a 21 EMA and excuse me, the 50 here, and then this is the 100. It's still behaving pretty well. Diamonds in a little bit of a consolidation after all-time highs were a couple days ago. Above the moving averages looks fine. And then the Russell, which had been the laggard, actually set all-time highs intraday on Friday, and it looks like an all-time close was 265.76 and close was 265.20. All-time closing high on Friday. Is this starting to look like a climax run? It might be. It's starting to get vertical. Think of what silver did. I'll look for the signal that says it's done going up, but right now, except for the fact it's probably getting a little bit overbought, it looks pretty good. If we look at volatility, this part really bothers me. The fact that we are clearly in a bit of a uptrend on the VIX, even though it hasn't moved much and it's below the moving averages, seasonality says it's going to run up for a while and then get a little bit of respite and then go higher into the middle of the year. If volatility goes up, that's bad for the market. On Friday, it was actually up a bit, 0.13. And then if we look at the dollar, this one's kind of funny to me in that it looks ominous in that it was starting to make a move. Get to, but when you look at the big picture and you realize where the dollar has come, it's hard to get too worried about the dollar sitting there. Commodities, well, we've had quite the run there, haven't we? Gold and silver have been amazing. We have been long both. You can see gold has sort of consolidating here after setting an all-time high. Um, is this it? Does it have more to run? We shall see. And where we started getting interested in gold was late, but we had drawn a trend line right around the tops there. We bought this breakout, and there's been a number of others since that we got excited about. Another one being up in here as well, buying this break here. But gold and silver have been super strong. They're consolidating here. They won't go up forever. Here's silver. Again, we thought this was getting to look like a climax run, and it gave a little bit of a shakeout, but not much. Ran up, set all-time highs again this week. On Wednesday, pulled back a little bit Thursday and Friday, still trading right about all-time highs. Oil, let's look at, I want more data. Year to date, pull this to the right. Oil is in a downtrend. And as many times as it tries to break above, it ends up reversing and going down. I'm not a buyer or a believer in oil here. I think that if Iran ever quiets down, we'll see oil potentially drop further. With the supply from Venezuela coming on, it starts to change dynamics in this world. Um, and at some point, we got to buy the SGR. So it's not just for the rest of the world that Trump is doing this stuff with Venezuela. It'd be nice to replace the SGR at a cheaper oil than what we sold it for. Natural gas, I like to use the terms dead to me. And why? Because it's just in a forever downtrend. And if we look here at the 10-year, this could be considered concerning. 10-year was up 1.76% on Friday. The 30-year held at the 200 and was reversal candle. It was up 1.19%. At some point, and there are some people that think it might be sooner than later. Let's go back to the 10-year. Let's look at weeklies, see if I can draw it well enough. Are we getting to a point where it's inevitable? It's not, drawing's not activated in all the charts, so I'm not sure it's there. Now it's going to work. Figures. All right, let me get this. Try this again. Are we getting to a point where we're going to see a breakout in interest rates, and that think what that does to the housing market and everything else? I sure as heck hope not. That would be bad for the US of A. And right now, that's where I live, and I'd like to see it be strong. And I'm not moving. If we look at the buckets, what the buckets show us is a lot of gray all the way over on the right, which would have been yesterday's height versus today's height, as the markets eased off of their overboughtness. I look at market breadth on the NYSE. I don't think it was a closing high. Let me get back here. So the close, what was a down day because it's red. So I know it wasn't on 22,807.06, 22,808. So the NYSE is $1 off of its all-time highs. The NASDAQ, you got to get back up to this level. This is the composites. You could see stocks above the various moving averages turn lower. And the one thing that I want to point out that has got me a little concerned is we've now had five bangos in the last 8 days. And these are just signs of irrational, bullish exuberance. And when they occur after a long bull run, they're probably predicting a top. So I'm starting to think we got a little bit more here, but I'm not sure how much more, and I don't think February is going to be pretty. Just my thought. Ratio charts, I like to see what parts of the market are excelling. You could see materials, energy, staples, industrials, real estate, all are popping here. And our old friend technology is down a lot, and as is communications. If I go and I look at the 13-week new high, new low, and if you watched my video on Thursday, I was concerned about the numbers. We're going to talk about this number here. 0.76 on the spider, 0.83 on the S&P 1500, 0.75 on the Russell, 0.58 on the NASDAQ. Those are fine. But if we went back one day, you're going to see some different numbers: 76, 83, 75, 58. There is a day recently where the numbers were higher. Oh, it's not changing. My bad. Hold on. Let's look at it differently. 88 the prior day. What I'm going to look at it, just look, here's the signal. See that it says 88? Down here, the prior day, it was 90. Dropped all the way to 83. Make sure we're back here. Prior day, 71. That's the one that's been underperforming. And prior day, get back here, 87. So we had some short-term overbought. Again, I said didn't have to happen on Friday, but probably would happen the next few days. So put it all together, strong market, lots of counter current out in the world, probably some geopolitical things that put the market at risk. I'm worried about those rising rates, but all things considered, it's hard to get too bearish when you're within spitting distance of all-time highs, even on the lagging cues. I like to look at my non-ratio chart sector timing model just to see are there any changes that occurred on Friday, and there was one, which we'll look at in a second. Here's Bitcoin, which has run up, is flagging. But the big change is down here on healthcare, went to a sell signal. So we'll have to see what happens there. Most of my LABU is gone. I was holding on my last piece to get to options expiration. Not that you have to. This is America. You can sell options anytime. My key stock timing, I like to run through these very quickly. These are the big boys in the market. I own some of them. Probably so do you. Amazon had a little bounce on Friday, trading down to the 21-day EMA and bouncing. On Investors Business Daily IBD Live, they like to talk about the 21-day EMA. That's why it's sitting there. I guess it's okay to be long Amazon. I hope so because I am. Apple, just no, period. It's been in a sell signal on my model since all the way up here on this day. I just don't see buying it until it gives me a reason. There's no reason on the chart. Google, a little bit of a flag. What's the difference? Well, look where Google is compared to the moving averages and prior highs. Google's in a pullback and an uptrend. I probably wouldn't buy it until I had a white candle or an open white candle, preferably. But I'm not dumping my Google yet. Meta teased us and then broke down again. I'll put this in the Apple category. Show me before I want to make an investment there. Netflix is just toast. And again, this is the best time of year. Netflix seasonality, we're not getting it this year. At least I'm not playing it in a downtrend like that. I made some of my best plays on that too. Tesla, Tesla all-time highs, then reversed when their deliveries didn't meet expectations or whisper numbers. And here we are lagging behind below the moving averages. I'd stay out until we got back above. NVIDIA, just like waiting for earnings and waiting to resolve what's going on with China. I wouldn't sell it if I had it. I'm not sure I'd be rushing out to add to it. And then you got Mr. Softy, just a falling knife that doesn't stop. Yes, one good day. Let me see two or three of those and make some headway before I pay attention. We looked at some of my favorite themes. LABU technically is not broken down, but boy, it's on the precipice. Um, I've owned a lot of LABU. A lot of you have probably bought LABU because of me. This is the fun time to own LABU. Okay. This is not. Pharma holding up a little better than LABU, but with healthcare weakening, I'd be watching that. A lot of things going on with Trump's various demo drug projects trying to reduce the cost of injectable and oral drugs. Pharma, like I said, has held up better, as I said before in other calls, because they've negotiated. I went super long data centers. Here is December 19th. That's not why I bought HWM. But on the next day, data centers turned bullish, got above the line, and look at data centers today, all-time highs. And then here's ITA. ITA is defense and aerospace. Here's your here's your December 19th. So think about HWM. It's been going nowhere, and it has a candle looks just like this. It's got the two dots momentum sign. It's got a squeeze. It's got great relative strength. So not only did I have a market that was okay, not great, but I had the top industry group and I had one of the better stocks in the industry. So I like buying it when everything aligns. ITA still looks dynamite, doesn't it? Phew. And then back to Amazon. So I'm going to pause for a second here, catch my breath. All right, now this is not a simple program. There's a lot to it. I've spent 45 minutes reviewing that trade, but more importantly, looking at the market, telling you what I think is doing well, where the strength is. We've built a lot more into this tool. I'm going to start looking at it from a top-down perspective. I have a base of 3686 stocks today. Those would be the stocks in the NYSE, NASDAQ, and Amex with more than $1 and 100,000 shares, all added up, and I have 3686. Each stock has a sector and industry group. So when I go to my top-down view, I'm still looking at 3,686 stocks. I can now look at where the leadership was on Friday, and I could see it was in real estate, energy, and industrials. I'm going to click on those three, and then I'm going to come over to percentage, and I'm going to rank them by percent move, and I could take the top 10. And that gives me 266 stocks that are in the top 10 industry groups and the top three sectors. And in my experience, if that's all you were to trade from, you're probably going to beat the markets as long as you recognize that there are going to be ebbs and flow of what's in that list. I can go into, but that's not investment advice. That's how I look at the market. 500,000 shares gives me 165. Let's look at by percentage move. This isn't the best way, in my opinion, because you're going to find things that have had a big move and might not actually be actionable right now. So if we start with AGX, and what are my thoughts here? Oh, we've got, all right. Why it's stuck on AGX? Let's see if it goes back to it. Well, this is interesting. This is AGX, not HWM. You can see it's Airgan. I've got this thing here superimposing. Don't know why. We'll get that fixed by the end of the day. Sorry about that. Major uptrend, pullback, and a breakout. Great volume. Double momentum signal on Friday. I could have bought this then. Relative strength at OBV looks good. Coming out of a squeeze. Is it extended? No. It's at 76. If I pull down the technicals, earnings are due March 26th. They're going to have $1.99 versus 222, kind of flat, pays a little dividend. If I want to look at what the news is, I could click again on the there, show me if there's any news, stocks clean to break even, Airgan. Should we ride the rally? Four building product stocks to buy despite tough industry backdrop. So if you want to read any of these, just click on the link and the whole link will come back up. I like this one. It's on my buy watch. VG Vonage, I think, of Venture Global. Don't know who this is. What do they do? I highlight that, or I just put my pointer over it and it says natural gas products. Well, that's not anything I'm going after. Consider natural gas. Let's just look at earnings for grins. I don't have any. TE, T1 Energy. Again, we can look up here. Lithium batteries, nice breakout. I like to buy things that pull back and then break out off of support, not things that are already running. ELVA, Electrovia. What does this thing do? More batteries. Well, I'm an EV guy, so I get it. 2 cents versus a 1 cent loss. That's a nice change. Revenue $1.6, 1.67, yes, billion, or $1.67 a share versus $1.12 a share. That's pretty impressive revenue growth. This was the time to buy it. I don't really have a signal here. The next one, AMPX. I thought there was a company called Ampex when I was growing up. I thought they're not around anymore. No, this isn't them. Amprius Technologies, lithium batteries. Is there a story there? Good volume, relative strength and OBV look good, breaking out above the 50. I like the pattern, $10 stock. LEU, one that I've been in before, and boy, this is the hardest stock I've ever owned to hold on to. It has whipsaws. And let me just point out the distance between here and here is $200 plus. This thing is a devil to hold on to. It's good to make money with, but boy, is it a devil to hold on to. Look at this amazing move, and then look one bar. And this is a daily chart, folks. One bar here was $48 in size at the reversal. Crazy. Looking at $1.43 versus a versus 320. Tough stock to hold on to, but it's been interesting. Interesting. All these big performers are some type of a battery. Fuel cell. I thought that was hydrogen. What does it say? Hydrogen per day. Yep. So fuel cell, DHC is at Dana Diversified Healthcare Trust. A number of healthcare REITs have been popping up. They pay dividends. This pays 1.75. Nice steady uptrend, 12 cents versus 2 cents. That's pretty phenomenal coming up. And, you know, if they own nursing homes, that's the future. Medical office, proprietary, senior living. Yep, senior living. I'm getting there. Bloom Energy, I was in this thing on the way up. I missed this. This was a great opportunity to get back in. Just you can't catch everything. I just don't know if I want to chase it this high up. So you're noticing something on these. Air gas looked pretty good, AGX, and maybe a couple others did. And again, ignore that. That's an error. This is AGX, but it's already run a lot. And that's the only caveat. Another thing I like to do is just look at who's got the most bullish impulses. NVT, Nvent Electric. This one I like a lot. It's on my buy watch, 89 cents versus 59, so 30 cents, almost a 50% growth rate. That's pretty good. Revenue's been growing nicely as well. Small dividend. Um, Anything that says electric has probably got something to do with data centers. Energy, industrial, infrastructure, commercial, and residential. electrical connections and protection products worldwide. Got to believe they need that in data centers. Uptrend, let's look at that on a weekly out of curiosity. So it's been in a nice uptrend really going back until July, excuse me, April. But right now it actually looks pretty good to me. Breaking out after a sideways move. Mac, Masarich, company real estate, don't know much about them. Fuel cell, another one of these alternative energies, which we looked at already. DTM and MLP, DT midstream, 2.89% dividend. Is it an uptrend? Yes. Sideways move into the 50 and a breakout. Momentum, breakout, volume, good relative strength. OBV close. That one looks pretty good as well. William Brothers is another MLP. TE, T1 Energy. Don't know anything about it. Talked about it already. Another way to look at it might have gone to be just look at the 5-day, what's been leading. And what comes to the top is that air gas. It doesn't. Remember, ignore the HWM. I can't because I own it. Fix, leadership, not extended, expensive. Going to have 677 versus 409. That's 268 out of 409. So that's over 50% growth rate. So it could probably afford a PE of 41. Power was another one that looked really good. Let's put a weekly on it. You can see it's been in a long-term uptrend, but even though it's been in a long-term uptrend, it's been basing sideways here, breaking out on massive volume. Sterling Infrastructure is another one that I like. I like the taking out the 50. I'd prefer it wasn't in a downtrend, but rather going sideways, but this one looks interesting. Look at relative strength breaking out and OBV. Primaris is another one I like. Now this one um, gave me a buy signal here, the double momentum buy, and it's popped 4 days in a row since then. So again, multiple different ways. And then the other one that we liked early on was nVent. So there's a lot of really attractive looking stocks, and frankly, a lot that look just like my HWM trade. Uptrend, sideways, breakout, off of support with a squeeze, momentum, breakout, dual momentums are what I look for. That's how I do this. That's how I've beat the market for a while now. And that's what I like to teach people. Of course, there's never a guarantee that your performance is going to be like mine. But I wasn't like this when I started. I learned from a smart guy named Ian Woodward, and I had no guarantee I'd be able to trade like him either. You got to have a place to start. And I really am thankful for Praveen who turned this into a tool that I use every day. GEV doesn't look like much there. Let's put it on a weekly. Big uptrend on GEV. Um, it's spin off from GE. I like the fact on the weekly, it's been going sideways here for a while. You could see this on the daily. I just think this thing's getting ready to rock and roll. It is not extended. That's the benefit of going sideways. Big volume, gap, volume, breakup momentum out of a squeeze with relative strength at OBV. GEV looks really good to me here as well. Lastly, I just want to show you bottoms up because it's sexier, easier, and a lot of you don't want to take the time that I just took. Here's that big list here. Let's clear my filters. Got my 3,686 stocks left. Let's go. Let me show you my favorite scan, A plus scan. Boom. I have some of the best stocks in the market. Again, there's an air here. This is not HWM, it's AGX, air gas, and air GAN, not gas. And that looks like it's ready to run the exact same chart as HWM. DX, Dime Capital, a lot of the asset manager companies look strong. Here's a consolidation and a breakout. It's getting extended, and that's my only concern. And it pays a dividend of 13%. Ooh, diggity dog. Going to make 48 cents versus making a dime. That's a 400% increase. That's consistent with the prior. It trades at a multiple of 7. Something doesn't make sense. It's either I guess it's a turnaround, but boy, that seems mispriced, doesn't it? Maybe that 13% dividend should only be about 4 and the stock should be about 60. Um, that might be one to look at. Why is this showing up? Double momentum dots, double momentum, relative strength, OBV turning up. And but again, this one's getting extended. ECG, there was a split in here. I'll have to talk to Praveen about the split. FHI, you know, here's the daily chart, Federated Hermes. I don't think this is related to the bags that I want to go buy my wife here, because she's been standing by me and she's such a great girl. And every time I go to buy her one, she wants to kill me, which is a good thing because they're hard as hell to find. But here's this bank, and we have $1.20 versus $1.04. That's fine. It pays a 5.66% dividend. I like that. Let's kill that. Um, there you go. Anything special here? Asset management, high net worth individuals. But what I really liked about it was this. A second, let me pull this back here, tighten up just a bit, and I'll bring it up here. And what I really like about this, ever hear the saying, the longer the base, the bigger the space? This thing has failed this line and sort of has a cup and a handle. A breakout above this may be my best one of the day, but it's got to break above that line. But that looks really, really interesting to me. GKOS, don't know anything about this healthcare stock. What does it tell me? MedTech and pharma in the same company, glaucoma. Well, this was ugly. When did earnings come out? February 17th. All right, so then I got to figure out, well, what's the news? Let's open up the news portal. This was on the 14th of January. They didn't like what the dude said at the JP Morgan Healthcare Conference. Huh, interesting. But what's more interesting is how fast it got defended. I do my research before I buy it. That's kind of wonky. Henry Schein is a distributor, HSIC. Um, I actually would prefer Core, COR, which did have double momentum. So back here and is breaking out. So it doesn't have it today. That's why it's not there. Cencora is the old ABC, and I like it right off the 50 there. LGN, industrial, IPO, take out of that high could be interesting. And Qantas, PWR, Quanta Services, like this one a lot as well. Again, I need more to show you that it's come off. Nice run up, but it's gone sideways and is breaking out. It's my favorite scan. It's going to be too many stocks, but let's just look at the A's and see if there's anything else. Here's that DX that has the big dividend here, just to remind you of why I liked it. 13.16 and 48 cents earnings coming out versus a dime in the prior. I like both those pieces. I like earnings. I like earnings per share growth, and I love big dividends. Kingsoft, is that what this is? No, Kodak Gas and Services. I did the same thing last time. Is there a story here? It's got a breakout above that level might be meaningful, but I wouldn't touch it until it got there. To get this scan, here's PPL. Let's see if this one looks better. You have to be coming out of a squeeze or in a squeeze. Your relative strength and OBV have to be turning up. Volume here is big, not a requirement. You got uptrend here. You're not extended. PPL looks interesting. I bet it's a utility, so it probably pays a dividend, 3.12. Well, for a market that looks kind of bizarre, there's a lot of good-looking things. Here's just another um, real estate. All right, I think I've talked enough. Yeah, I just gave you like 20 stocks to buy. I'm not buying 20 stocks on Monday, first or Tuesday, rather. I want to see what happens with the news. But I showed you that Erme Bank, that looked pretty good. That DX Capital, that looks really good. That AGX, that's a nice play on the data center story. That looks good. Um, Let me just go back one more time and look at that A plus. I think that's it. Here's the FHI is that Erme. And then the Qantas Power, which is a very, that's not FH, which one was that Herme Bank? Wasn't the FHI. But there you go. There's a couple of nice things to look at. I think the market's going higher, but might stub its toe for a couple of days, and I will move my cash up or down accordingly. Thanks, everybody. Hope I didn't piss anybody off by going through that initial trade. I don't like to share and brag, but you know what? You're you're paying for this in your time. And do you know that everybody who puts out videos actually trades real money and actually wins sometime? Have a good one.